Okay, good afternoon, everybody. This is Dennis Wilbur with the Active Trend Trader. Welcome to the Making Money Trading Stocks, Options, and ETFs. I have expanded ourselves to basically include what we're doing with options also. And again, this is a free webinar. We basically just talk in generalities about what the market is doing. If we do have a couple of potential, I try to put out at least one free trade per month, or about 10 per year. And so I will talk about that. Joining us from Zurich, Switzerland is Michael Bischoff. Michael, welcome.
Well, hello. Nice for having me.
And one of the things I'm going to ask you a little bit later, Michael, is you had mentioned some Chinese tech stocks. I would, when we get to the stock review point, would very much like to know, if you would be willing to share what those are. And,
yeah, sure.
And we'll get going. And so, okay, here we go. I want to remind everybody that all the materials we do present are for trading purposes only. Traders should always pay per trade any new method prior to the risk of their own personal capital. Past performance is no indication or promise of future performance. Our motto at Active Trend Trading is basically we want to clarify, simplify so that we can all multiply. What we're doing in our individual accounts. It's amazing. Active Trend Trading now has been in existence now for 12 years, and so I'm really pleased with that. And so, okay. Now, Michael, you know that basically you should be able to see the chat. And so if you want to, you can respond to the individual chats.
I got it, yeah. Okay.
Roger that. So always buy wholesale and sell retail. Works in stock, works in your, when you're trying to buy your house. I know that some people back in California, they bought at the top of the bubble, so they were buying retail, and they wound up getting stuck with a loan that went against them, and they wound up having to sell even below wholesale. So it works in houses, works in stocks and options also. That's what we want to be looking to do. The objective of this session is basically timely, actionable intel review at the end of each week. Today we're going to be covering a couple of stocks. I'm going to be covering just briefly a concept of seasonality in both gold. We've been talking about that on a continuous basis. But I also want to start looking towards the indexes, because normally September is struck by the summer doldrums or the fall doldrums, whatever you want to call it. And normally the seasonality of September is very, very, very weak. So what am I finding for the markets right now? I'm finding mixed, reactive, over earnings, and you kind of got mixed, reactive over earnings, tweets, and tariffs. That's what I'm finding going on with the indexes themselves. Okay, Tesla was a surprise this week, basically, and that pushed us back up over 20% for the year, and it primarily was related to what was going on in Tesla. Tesla did okay on earnings, but then Elon Musk, between Elon Musk and President Trump, I think both of them get exaggerated emotional responses after they tweet something out. But that's what's driving. That's what drove us up this week. Very interesting. We'll be looking at those here shortly, and then. This is a cumulative of both, ongoing trades and also trades that have already been closed out. And as I've indicated several times, this is what our premium members get. They get a go, no-go table, which basically highlights the stocks that we're primarily following. And last week, on the 5th, at least, on Sunday, we were showing a TSI setup in both Qs and FAS, FAS, that actually could have executed on Qs and RFAS. However, today we're seeing a pullback, and as we see with the spiders and that kind of stuff, really dropping out of the air. And so others that we're keeping our eye on, of course, is gold. When in the world is gold going to basically kick in with its seasonality? And then again, Tesla waiting for it to digest its earnings, gains. If Tesla goes private, which that's what Elon Musk says he wants to do, it's anticipated the price of it going private is going to be about $420 per share, and that'll benefit us with the Strategy 3 process. That'll put us up probably about 65 to 75% return on top of paying for the existing underlying position on Tesla. And Grub, NVDA, we're still looking at. Here's what we did. It's been kind of a slow week this week as far as we do have BABA. We have earnings coming out next week on 8/23, and that's BMO, before market opens. So so if you're open in a position on BABA, you need to be, and you don't want to hold over earnings. You actually need to close that position on 8/22, the day before. And so I'll come back to the seasonality aspect. I want to chat about that real briefly. Let's go over here to a couple of our charts. And let's start out with the spiders, or the S&P, if you will. S&P, okay, what we have here on the daily basis is an island top. It got hit to the downside. We've dropped below the 8-day moving average. TSI has rolled over after negative divergence here. Just be aware of that, negative divergence here. And also, we do have negative divergence going down on the weekly chart. Excuse me. As we see, as price action made its way back up towards its all-time high, TSI, the momentum, if you will, was waning, was not going up nearly as quickly as it had done in the past. And it had already dropped down below the zero line. Oftentimes when momentum or the TSI drops below the zero line initially, you get one of these down, up, failure prior. It's kind of like the stocks themselves or the ETFs themselves. Failure of the rally, and then it dives back down, setting the tone for going into a more significant downtrend. And so that's what I'm seeing, Michael, with the S&P. Now, are you doing anything trading with the S&P right now, or what are you, in fact, trading? I know you mentioned something about Chinese tech stocks.
Well, I think what you should be aware, maybe as American, it's all is centered to American indices, but actually, I think out there, the SPDR, QQQ, IWM, or Russell are the only indices on all-time high. I mean, you could take, I think, every international market, every commodity, everything is pretty weak, or has been pretty weak for the whole year. So this is really, basically, that's the only, also if you go for the major asset classes, this is the only trade that is successful, long US, long dollar.
Do you think that's one of the things that is driving the dollar? Here is the dollar. See, this is the dollar index, and you can see it has actually broken out. Mm-hmm. Mm-hmm. So for those of us who have been waiting for the gold to kick in, when the dollar is rallying, the potential of gold going up is diminished. Yeah. And so while gold may be hanging in there, but we have dollar back rallying. But do you think the weakness in the European market and the other foreign markets and also to somewhat in the U.S. market. Do you think that's what's driving the price or the dollar up?
Well, actually, I don't know. I mean, technically, it's simple. I mean, US is basically the only region where interest rates are raising, or where the central bank has clearly communicated and is already doing or in the process of bringing the interest rates up, and and everything. I mean, in Europe we have 0, in Switzerland and some other, I think Sweden, Denmark, we have negative interest rates, Japan negative. So maybe that's I guess this is the reason. Yeah.
Okay. So we talked a little bit about the Qs. Qs showing something similar. I mean, we basically put in this, this quasi double top, if you will, here on the daily basis. It's not it basically has run into overhead resistance at the 182 level on the Qs and is dropping back down. We'll have to take a look. It is a itty bitty tiny shooting star on the weekly chart. However, it is followed up by this other one over 3 weeks ago, and that's a little bit more of a significant signal, 2 weeks ago. And as you can see, that shooting star is still in effect because, one, we have not taken out the top or taken out the highs of that. IWM, which had been leading a little bit. Basically, IWM is doing its own thing. I mean, excuse me, it's not showing the same type of wanting to fall the way the S&P and the Qs are. Now, it is at a level of support resistance up here. The ceiling is at 170-ish, but it's doing a nice bounce off the 8-week moving average, which is equated approximately to the 50-day moving average, where it bounced here at 165 and is rebounded up. Now, it is running into a resistance area between 168.68 and, of course, 170. And so it could go, in fact, either way. So, but it is in better shape than the other two indexes. The other thing to keep an eye on is, as I ask Michael, if here is the FXI, which is the large cap Chinese stock market. We've had a 20% pullback, so it is officially in a bear market. Officially in a bear market. However, it looks to be like it's trying to build a base here to potentially launch off of. So, Michael, you said you were looking at a couple of what are the Chinese tech stocks that you are looking at right now?
Well, Alibaba, I have almost always a position on there, and I think you too, or that's also one you follow. And the same is Baidu. Okay.
Yeah, I really like Alibaba. Yes, it is in a downtrend, but it's close to the bottom of the channel. What's coming up next week on Alibaba is, of course, earnings we talked about. But if we finish right where we're at right now, this would be, for me, I would look at potentially buying a call, going into earnings, and then selling it right before earnings. And then, of course, you mentioned Baidu.
But just a remark, this is a typical chart. You see so many of other successful companies in Europe.
Oh, okay.
So somewhere not really looking bad, not looking very good.
So here's Baidu. Now, one of the things I've learned is, of course, we want with the longer term weekly TSI down below the zero line. Yeah, we want to wait for something to happen, some kind of reversal signal. Right now, we're not getting that, but it could actually fall all the way down here to approximately retest the lows of, let's go to about there, about the 214 level. And if we start getting some reversal candles at that point, Baidu may be one of those that is just working within a lateral, horizontal, a lateral trading range, and can go up. Now, are you watching IQ?
Yeah, but I think I played that well, and then I gave up taking a good profit. So I haven't followed it in the last weeks.
Okay. Because I'm looking at IQ. It's hanging out right here just above the, I want to say this is the 100, or is that the 200?
All I know that IQ is kind of the Chinese
Netflix. Yeah. So anyway, I'm keeping my eye on that. So that's a couple of extra ones that we're keeping our eyes on. And so I wanted to just leave that with you guys. Then I don't know how many of you actually trade futures or don't trade futures. On the Michael, you trade some futures, correct?
Yeah. Mm-hmm.
Okay. I think one of the things is to have the ability to trade futures. So one, have it in your toolkit. I wouldn't go crazy on it, but one of the things I've been learning, my wife's been learning how to trade futures, and I've been kind of following her progress. Very happy that she's getting involved with the stock market. But one of the things I've noticed is that it's a highly leveraged trading vehicle. However, one can apply daily and even weekly technicals to it to identify good buying positions or selling positions, and it moves pretty dramatically. And so I basically am following 3 different ETFs, or not ETFs, but futures.
I mean, I like
one is CL, which is, of course, what's that?
I like options on futures because, I mean, there you can really do conservative trades, like a really big strangle on oil, for instance, and the fees are really minimal because you are trading a big thing. I mean, what I don't like is this premium trades with this tiny with stocks with tiny notional values, because there you just pay fees for getting a very small premium.
Thanks for covering on that, Mike. Michael, I dropped offline for a second. Am I back? Can you hear me now?
Yeah, I can hear you.
Okay, excellent. Stop recording, start recording. It's all's good. And let me get the chat back up. There we go. There we go. Okay, there we go. There, CL. This is the oil, and basically it's running somewhere between 66 all the way up to 74. The thing that's very interesting about this, if you can get it trending and pick it up, at where it starts the trend, it can be very lucrative. Basically, the full-blown CL, which is one way to trade it, it is $1,000 per point. It's about, I want to say, $4,000 worth of margin it wraps up. But you can go also to what is QM, which is it's a half position. It's like rather than $1,000, it's $500. And one can learn how to trade these. And basically we're going to be doing an introductory with this with the active trend traders in our premium training sessions on Wednesday evening when I get back from South Korea. So this is one of them. The other one is RTY. RTY is the Russell. Again, similar type thing. The Russell, equates to, I want to say $50 per point or something like, yeah, about $50 per point. So if it goes up 10 points, that equates to $500. And then last but not least, there is gold. And the gold futures are sitting just like the regular gold. But when gold starts to move, it goes up at, I think, at a clip of approximately $100 per point. And so if gold runs back up back up into the 1350 or 1300 level, you can do the math on that from 1219 up to 1300 is about 80 points, and 80 times 100 would be about an $8,000 move. Again, each one requires a certain level of leverage and margin. But anyway, I just want to introduce that to you. So do you trade those, Michael?
Yeah, but as said, I like options on futures, because for premium plays, you just avoid a lot of fees.
Okay. Okay.
I mean, if you compare, for instance, USO with CL, that
right.
really makes a difference.
Yeah, you can basically, and that's one of the things that I'll be coaching on, is that if we have the CL,
or also a strangle on gold, even if gold is a huge future, it's pretty feasible also for sizing. I think
yes.
It's about $5,000 margin, and for one standard deviation strangle, you get about $1,000, I think.
And that's what links them back to, GLD and USO on the oil. So let's move on to finish up. But I just wanted to, sorry for the little bit of a move over to that information, but it's, I want to highlight, there we go. Here's the seasonality. Here's what I want everybody to just kind of be aware of, is what tends to happen in the August-September time frame. Okay, as you see, this is S&P seasonality, 20 years worth, ending 2/31/2017, and we see during August, okay, this is a 2% to 3%. That equates to about a 1% move. And typically in September, and August and September, it pretty well is contained within just a 1% move. Like the other entities, though, it does typically sell off a little bit into the September timeframe, hits a low in October, then rallies up. So I wanted to provide that to you. If X marks the spot, we want to be ready for that move right there. And we want to wait for the reversal. And then typically the move is about on the S&P. See, from 1 to 7 is 6%, so about 6% worth of a move. And then add to that gold, of course, a gold I've been following for quite some time. The seasonality of gold says it's time to rally. However, the other pressure on gold, which we talked about being like the dollar strengthening, the dollar strengthening, basically it says if the dollar is strengthening, very few times in history have gold and the dollar gone together to the upside. So looking forward to the future. One is September 15th. We're going to be basically doing this is going to be a webinar. This is not going to be a webinar. It's going to actually be a live meeting at the Bay Area Moneymakers in San Jose, California. 2 days before that, I'll be doing a Silicon Valley Options Group meeting in San Jose, 6 p.m. in the evening. And then bam, 9 o'clock Saturday morning at the Masonic. Then, of course, premium training. Now, premium training we do typically every Wednesday night. New training videos for premium members. And so let's see, Michael, I'm going to show one other stock, and that's basically, I'm going to pull the plug there because I didn't get on to the next. And that stock I'm going to keep an eyeball on is basically SEG, no, MU. There we go, MU. And I'll tell you why I want to keep an eye on this. One is MU is rapidly approaching its support at the 200-day moving average. And I look at that as being kind of like the make or break move for MU. If it holds up there at, let's say, around $50 and it reverses and we start doing something constructive over here, because you look over here on the weekly chart, the uptrend is still fairly in good, is still active. And as long as we stay above that, $50 range, or in this case, that's the 40-week moving average, which equates to approximately the 200-day moving average. As long as we stay above 49.53, and it does a rebound, we want to be, looking to stay long on MU. No signal yet, so that's just something I wanted to highlight to you. Another one to just keep your eye on. Nope, MU. That was basically it for right now. So until next time. Now next time will be on August 31st. August 31st, and the reason for that is. This coming Sunday, I leave for South Korea because our new grandson has just been born, which I'm very happy about. We'll be doing the final hour at the top of the hour. And so have a great weekend. Aloha, trade well, and prosper. And there the little guy is. That is Levi Rufus Wilborn, named after my father. That's my son, Dennis Wilborn, Jr., and so he was born just a couple of days ago. They got him home, and so really, really happy to have that. And so we're Tutu and I are going to head for South Korea on Sunday the 12th. We'll be back in Hawaii the 24th, and then we'll be back in gear. Now, I will be putting out information and recordings during that time frame, but none of them will be live because guess what? 8:28 in the morning here in Hawaii. It's like 3:30 in the morning in South Korea. So I love you guys, but I'm not going to do that that early in the morning. So anyway, Michael, you got anything else, buddy?
Well, if you want to look into a chart, then Turkey, the ETF TUR would be the one thing to watch. It's a drama there.
It has a lot of drama,
and as a consequence, also some European banks have been smashed.
Yeah, it had been declining for a long time, and this just did an acceleration. So, okay, excellent. So Turkey. Yeah, so
Deutsche Bank is a consequence, or they are one of the with big loans to Turkey.
Yep.
They got crashed again.
So, let's see, Gary. What about interim election year? Yeah, I don't really have anything seasonality on that. You can go check those websites on seasonality to see if you can find something. It's with the predictability of the elections here of late within the United States, it's a toss-up to me. And then Mark, you ask, am I going to broadcast the option group meeting? Probably not, simply because I don't think they broadcast that meeting itself. And so I may have to try to figure out a way to record that, though. That'd be kind of do a live recording. So. Okay, Michael, thank you very much, my friend, and everybody else. Let me go back and
always happy to be here.
My final aloha, and from me and my son and grandson. God bless everybody. Aloha. We'll talk to you in a couple of weeks. See ya.
See you. Bye.